Midas touch, golden energy. Welcome to Golden Ice Forex, the YouTube channel where we talk about smart money concepts, institutional trading methods.
That's why he's the GOAT!
Now, as we get started, I want to take you through market structure. So let's get right into it without further ado. So when it comes to market structure, this is what you have to be looking for in the market. First things first, I'll illustrate here. So the market moves in impulses and corrections. Impulses and corrections. So this is a bullish example of an impulse and a correction. Price moves with an impulse. This is the correction. Then price moves with an impulse, breaking this structure, comes back for the correction. Price moves up, breaks the structure, comes back for the correction. Price breaks the structure, comes back for the correction. And it goes on and 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 on. Now, here is a bearish example. Let's move on to the bearish example. Price here, let's say hypothetically speaking, price is moving in a downtrend. Price moves down, comes back for the correction. Then price moves down as an impulse, breaks their structure, comes back for the correction. Breaks their structure with an impulsive move, comes back for the correction. Breaks their structure, comes back for the correction. So each and every time price moves, it moves in impulse, correction, impulse, correction, impulse, correction. The impulse is meant to break a structure. If the impulse doesn't break a structure, we don't count that as a downtrend. It will now be an uptrend. So now let me illustrate that further. Let's combine that. So price moves up, moves down for the correction, moves up, down for the correction, breaks the structure, breaks the structure, comes back for the correction, breaks the structure, comes back for the correction. Now for the next part of the video, here's the important thing. Price moves in the form of A's and V's. AV. That's the basics of market structure. AV. So the A is what I'm illustrating now. So this is how it moves. Impulse breaks the structure. Now listen carefully, pay close attention. This is the most important part of the video. If price fails to break this high and breaks this lower low, this lower high, then we have what we call a shift in market structure. Shift in market structure. That's what we have there. So price then comes back. Price has shifted from a bullish sentiment into a bearish sentiment. We're not looking for sells here. So price now comes back there, breaks this structure. We now call this a break of structure. This was a shift in market structure. We now call this a break of structure. This is also called a change of character, but we're going to talk about that more when we're now looking at order blocks in the video that follows. So price then comes back as a correction, impulse, breaks the structure, comes back for the correction, impulse, breaks the structure. So that's the formation of the A. Now let's move on to the formation of the V. Now for the V formation, price will be in a bearish sentiment, like that, like that. Okay, there are breaks of structure here, breaks of structure here, breaks of structure here, breaks of structure here. Breaks of structure. Yeah. Okay. Pay close attention again. This is the most important part of the video. Again, second most important part of the video. Okay. So price then breaks the structure. As soon as price breaks the structure, we're now looking for buys. This is a change of character or shift in market structure. Shift in market structure. Market structure is shifted from being bearish to being bullish. So price comes back for the correction, moves with an impulse. This is now our break of structure to the upside. Break in market structure. Comes back for the correction, breaks the structure. Comes back for the correction, breaks the structure. So now we're now in a bullish sentiment, from a bearish to a bullish. So an A is bullish to bearish, and a V is bearish to bullish. This is how you get quick reversals, and this is very accurate. So now let's move on to the charts. Okay, this is British pound, Japanese yen. So look at what I was talking about. Price was moving with an impulse. Here is the correction. Impulse. This is the impulsive move. This is the correction. This is the impulse. This is the correction. And as price moves, we have these breaks of structure. As you can see, price broke structure here. Correction. Price broke this structure here. Came back for the correction. Price breaks the structure again. Comes back for the correction. Price breaks the structure. Okay, now look at this reversal here. Price had reached a peak, a very peak level. So price came down, failed to break this high. So whenever you see price failing to break a high like this, it's a very strong indication of a reversal. So look at this. Price fails to break this high. This was a higher high. This was a higher low. Then this is what we call a lower high. It failed to break this high, so it's a lower high. Then as soon as price breaks this recent higher low, this most recent higher low, as soon as price breaks, we are now looking for bearish. We're now looking for bearish price movement. So price moves in with a correction. Here is the impulse, breaking this major structure. Whenever price breaks a major structure, like this was a minor structure, this was the major structure. So this major lower high was broken. Sorry, this major lower high was broken. We're now looking for sells. So price comes back for a correction. Here's the impulse. Here's the correction. Here's the impulse breaking the structure. And it goes on and on and on and on and on and on and on until Jesus comes. So as you can see, break of structure, correction, break of structure, correction, etc., etc. Now we can also see the same thing happening on gold. Very textbook. Look at it. We have our impulse, correction, impulse, breaking the structure, correction. Then price fails to break this high. It fails. There was a major rejection, because if we zoom in here, if we zoom in properly, if we zoom in here, we can see there was a rejection candle on the H1 time frame. Whenever you see this, this is a strong indication of reversal. So we're not looking to enter here on the reversal, we're looking for price to break a structure and come back for the correction. Then we enter on the correction. So here was a break in market structure, waited for the correction, break in market structure, waited for the correction, now as you can see, price broke this structure, so we would have been looking for bullish sentiment. So we would have looked for price to come back to this area of supply, move up. And if you don't know what an area of supply is or what an order block is, you're gonna watch it on the next video where I explain. I know most of you are asking yourself, why is he teaching about market structure? This is the basics of forex trading. If you don't know what market structure is, you don't really know what you're doing in forex trading. So market structure is the framework, is the skeleton of forex trading. You need to know how the market moves in terms of market structure. So then how you then enter in the market is then determined by market structure mostly. That's the first thing that you see when you look at your charts. So I think that'll be all for now. I'll see you on the next video.